Let's take a look at some of the transactions and journal entries from Chapter 5 from the point of view of the seller. So we're going to be working through this example problem. It says, on May 1st, Artie LLC purchased $7,000 of goods on account from Arizona Company, terms 210 net 30 FOB shipping point. The goods cost Arizona Company $3,000. Then Artie LLC pays $150 for shipping on May 3rd. On May 5th, $400 of damaged goods were returned. The damaged goods have a fair value of $50. On May 9th, Artie LLC pays Arizona Company in full less the discount. So we are going to be journalizing these transactions as Arizona Company, as the seller in this case. So here on May 1st, when we make our sale, we have two different entries. The first entry is going to record the credit sale. So that's going to be this first sentence where it says, Artie purchased $7,000 of goods on account from us, Arizona Company, with these terms. So these terms, 210 net 30. What that means is Artie will get a 2% discount if they pay back within 10 days, or they have to pay the net, they have to pay all of it within 30 days. Then FOB shipping point means that Artie, the buyer, will have to pay for shipping. So that's the information that we need for this first entry. So if we are selling goods on account, that means that Artie owes us money. And whenever someone owes us money, we want to debit accounts receivable. So we debit accounts receivable for this $7,000. Now, why do they owe us this money? Well, they owe us this money because we sold them some goods. So we credit sales revenue of $7,000. So that's going to be our journal entry to record the credit sale. Now the second entry is to record the cost of the merchandise sold. So this is where that second sentence comes into play. The goods cost Arizona Company $3,000. So these goods cost us $3,000. So we debit cost of goods sold for $3,000. And we will credit inventory because now we have less inventory. So we credit inventory for $3,000 as well. Now, on May 3rd, Artie LLC pays $150 for shipping. We are Arizona Company in this case, so we did not pay for shipping. So we do not need a journal entry for when Artie pays for shipping. Moving on to the 5th, you'll notice we have two entries here again. On May 5th, $400 of damaged goods were returned, and the damaged goods have a fair value of $50. So if we think back to the entries that we made when we sold all of these goods, there's going to be some similarities here when there's goods being returned. So if our customer is returning goods to us, they don't owe us as much money now. So we will need to decrease accounts receivable. We will also need to show that we didn't make that sale. So there's this account called sales returns and allowances, a contra revenue account. So we'll debit that account for the $400 worth of goods that were returned. And we credit accounts receivable to show that our customer doesn't owe us that $400 anymore. Now the damaged goods have a fair value of $50. So these goods are coming back to us, coming back into our warehouse. And so we show that our inventory is going up by 50, and we decrease our cost of goods sold by 50. Now here on May 9th, Artie LLC pays Arizona Company in full less the discount. So we need to figure out what Artie owes us at this point. So we have this T account down at the bottom for accounts receivable. We initially debited $7,000 for accounts receivable, but then with that return, we credited $400. So now Artie owes $6,600. So we are going to need to credit accounts receivable for that $6,600 to get that off of our books. Now, they paid back within this discount period, within the first 10 days. So they get a 2% discount. So we need to find what 2% of $6,600 is. When we take 6,600 times 0.02, we end up with $132. As the seller, we put that discount into an account called sales discount. So we will debit our sales discount for $132. That leaves us with one last account to debit, and that's the amount of cash, the amount of money that we will be getting. So if we take our accounts receivable minus our sales discount amount, we get the $6,468 that Artie LLC will be paying us here on May 9th.